Hey there, it's Mike Wise, CMG Home Loans with your weekly mortgage update. And this week, well, we had mortgage rates up and we've had mortgage rates down and we've had tariffs, we've had inflation, CPI, PPI, housing starts, a lot of stuff going on this week. It was a very busy week and I want to go over that with you here in a little bit of detail. So let's take a look on the vibe board and see what we have for the week. So the beginning of the week actually started out on Sunday night with the China tariff reprieve, right? And so what happened here is the tariffs with China and the US, they went into a 90-day reprieve. And so they went down from the 145% down to 30% for any goods that were coming into the United States from China. And any goods going into China from the US, it went from 125% down to 10%. So the market loved that news as far as the tariffs there's some resolution in the future here, and that they are China and the United States talking about the tariffs and kind of figuring out what that's going to be going forward here. So the market loved that. Actually, the stock market loved it. The money went into the stock market. It came out of the bond market. The bond market, the prices went down, yields went up, mortgage rates went up as a result of that, right? And so that they didn't like that as far as the market was concerned. CPI, it came out on Wednesday morning, and the 3-month annualized number is at 2.1%. Well, and the core is at 2.9%, and the Fed's target is 2%. So at the end of the day, inflation is really, really under control, and I'll go over those a little bit in more detail. Housing starts, basically the housing index dropped 6 points. This is ending 5 consecutive months of improvement, right? So that was not great news. The rental rates, this is important news. Rental rates, Realtor.com April rents report showed asking rents down 1.7% year over year. And so this is the 21st straight month that national rents were down year over year. This is important because I'm going to show you some inflation numbers in just a little bit. And then finally here, retail sales, they came out. Basically, they were pretty flat. What happened here is the auto sales, that drove the retail sales numbers to be a little bit hotter than expected, but it wasn't overly a huge number. So what happened is people went to buy cars. They moved that car purchase up because they wanted to kind of make sure that they didn't have the tariff tax on that. So in any event, that's what happened with the retail sales. Want to talk about the Fed funds rate. There's still a 92% probability that the Fed is not going to change. In fact, JP Morgan Chase came out this week. Inflation numbers, remember a couple of weeks ago, they were like 65%, 70% that there was going to be a recession. That's moved back down to right around 50% about having some type of recession. So that's where the Fed is kind of landing right now, is a 92% probability. And if you look down here, Federal Chairman Powell, we may be entering a period of more frequent and potentially more persistent supply shocks, a difficult challenge for the economy and central banks. That's the tariffs. That's him saying, I don't know, we got to look and see what the data is at this point in time before we make any changes. So that's kind of the updates there. Interest rates this morning, 6.94%. They were up a little bit from yesterday, but not much. They are starting to trend down as far as the positive numbers. Here's your payment, $49.60, principal and interest payment on a $750,000 loan here. So that's where mortgage rates are. And let me show you, we're going to go here real quick and show you this Powell interview here. So basically what I wanted to show you here was that Powell is in no rush to cut rates. They're waiting until they have more data. All the rest of the countries around the world are starting to drop. And I realize there are other reasons why they're dropping. Their economies aren't doing as well as the US is doing. But at the end of the day, the inflation is down. Companies are not hiring as quickly here. They've slowed down the hiring. And I really do think that they have some room to move here. But they're really blaming the tariffs that are kind of the monetary policy of like, why should we move? Because we don't know what the tariffs are going to have an impact on the economy, right? And so they're talking about those things. But what they don't know and they don't understand is that really, they do understand this, they know this, they're smarter than I am, but the Fed, the lag effect of the monetary policy and how long it actually takes for it to go into place. So they're really waiting for some shoe to drop and really for companies to start laying off people before they start lowering the Fed funds rate, because inflation is really, truly, I'm going to go into that in just a second, but inflation is really under control. And so you can see here that the Fed, they really need to drop a little bit more here. 0.25% at the next meeting would be super helpful to the consumer and keeping them confident that the interest rates are coming down, and to the housing market as well, which is suffering still at this point in time. But everybody else, European Central Bank, they're cutting. It's a lot of stuff that is going on that I really do think that the lag effect especially is an important piece of the economy moving. So let's go real quickly to our markets, and I'm going to show you exactly where we are and a couple of kind of pain points in especially the yield on the 10-year Treasury, right? So right here, this is where we are today. So you can see interest rates, they started to go up here. Now they've started to come down. This is the yield. And this is, I think it's called a double barrel, but basically where this negative, this downward pressure of the yield, see how it engulfs this whole day yesterday? Well, that means that's kind of pushing rates down. And so we've hit the 4.416 number today. If we can get past that, we're going to go down to the 4.38 number here in the yield. So the yields, they've gone up here, and now they're starting to trend down. And so this morning, a little bit of volatility in the market. So you can see here that the prices have gone up. That means that the interest rates are going down, the yields are going down. But we've hit this ceiling right here. If we can get past that, then we can go all the way up to the second resistance number of 101.80. So we'll see what happens today with the rates. But let me take a little bit of a deeper dive into the inflation numbers. Okay, so we're going to go here. All right, that worked here for me. All right, so inflation numbers. So the core inflation month over month was up 0.2%, 2.8%, which is unchanged year over year. The monthly percent effect is 0.24% on a month over month basis, and the year over year was 2.78%. So now, this is important. Shelter, which takes it makes up 44% of the overall core consumer price index, right? And month over month, it went up 0.33%, which is, right in line with estimates. But just keep in mind, that's 0.33%. The month over month effect is 0.15%. So of the 0.24%, it was the 40% of that was basically 0.15%, right? And year over year was 1.77%. So you can see the impact that it's making overall, right? And a couple of things. The rents, they're going up at a slower pace. That was 0.3%. Owner's equivalent rent, this went up 0.4%. Now, this is a big number, and you can see it was 4.3% here, which was the year over year number. Now, that's basically people calling up individuals that own homes and asking how much they would rent their house for. This is a crazy number. It's very volatile, and it makes a big impact on the market. Now, lodging away from home, hotels, short-term rentals, that was down 1.4% year over year. So that's starting to come down as well. Now, the other things that affected the core consumer price index is airline fares. Airline fares are down. That was a huge number. Used cars and trucks, that was down month over month. It was still up 1.5% year over year. And then motor vehicle insurance, that was up just slightly as well. So if you look at these numbers here, we're looking at, this is 0.12% of the total month over month effect and 0.82% of the year over year. So these are, this is showing you that inflation is down on everything. The biggest piece of inflation right now is still shelter costs, and we know that those actual numbers are coming down. So we already went over this, but basically the core and the headline, the numbers, they're down on an average, 3-month running average is 2.1% down from 2.9%, and 3% on the 6-month down to 2.9. So these things, they're starting to come down here, and we're starting to see some relief on the inflation front. So producer price index, this is a lot of the same stuff that I'm talking about. So I'm not going to go into detail on this, but at the end of the day, the numbers, they came out, they're showing, the headline number was down 0.5% versus the estimate of 0.2%. So that's why the market actually rallied very, very big yesterday on Thursday because of the producer price index. That means that the items, the goods that you're buying, they're being produced at a lower level. Energy prices are down, and that's making it a lot less expensive to deliver those items to to us as the users of those products. So that's a big piece of that. Or to make those items, it's a lot cheaper. The core number was down 0.4% versus the estimate of 0.3%. So there was a lot of adjustments, a lot of that went on from the previous months that would have actually been a lot helpful if they would have actually had those out earlier. But these adjustments to the previous months did impact the market or the changes a little bit. Now, last thing I want to talk about before we leave is the housing starts. The housing starts, so these are permits here. Permits down month over month to basically, and year over year down 3.2%. It is the permits are not, that's not good, because the formations, they're at 1.8 million. We're talking about 1.4 million here of permits, right? That's not a good thing. Now the actual starts, the housing starts are up 1.6% month over month. Annual units 1.3 million. Remember, 1.8 million is kind of what we need because of the population that we're at and we're growing, right? So the housing starts are down year over year. Now check this out, multifamily up 11%. So we're producing a lot of that multifamily. Why is that important? Because that's rents. Rents are actually, they're starting to come down because there's more multifamily properties out there, and that's bringing the prices down because there's more of supply, and so it's bringing the rents down. That is going to affect the CPI based on the shelter costs that I showed you a little bit earlier in this video, and those shelter costs will start to come down. That's the lag effect, and that's again why I think that the Fed needs to start to lower interest rates to spur the economy a little bit, because I do think there's going to be a glut of those going forward. So at the end of the day, that's where we're at. That's the update for the week. I will be around this weekend. If you have any questions, please feel free to reach out to me. Anyways, I will see you next week. I hope you have a great weekend, and we'll talk soon.